Good morning, everybody. Uh, it's good to welcome you to this update. We've been on it for quite a while now, and you might be wondering that I just, got stuck to Euro USD. The common mistake that most people make is wanting to, analyze too many instruments. When you can actually make all the money you want to make on just one instrument. I guess why people do that is because they don't really know what they are doing. Uh, if you're a service provider or you're a mentor, you might want to touch on all the instruments because you don't know the preference of uh, your mentee. So you try to cover all the instruments as much as possible. But, I don't have a paid platform. I don't do that. So this is just what you give people freely. And I rather want to do what I consider practical, and just try to encourage you to stay with one instrument. Yeah, there might be periods of low volatility, narrow corrections that you might just notice with a particular instrument. But of course, even with the narrow corrections that you might notice, a narrow corrections of say between 50 pips, less than 100 pips, those are narrow, but when you understand how the wave and how the pattern works, you could still make something out of those. The most important thing is for you to understand this thing and how it works. Then you can now begin to make your money consistently. Looking for opportunities on, several instruments going from pound USD to NZD card to gold to whatever. See, it's greed. It's greed. You can make what you want to make on any instrument, be it gold, be it anything. Because of the fast volatility that you experience with gold, these commodities at times, oh, that may be fascinating. And the same way it moves to, give you profit, that's the same way it's going to move to make you lose. So the most important thing is you have to really understand what, it's all about. Otherwise, you continue to lose your money. Now, this is where we are, and it's another update. So we have confirmed that now we are seeing a reaction here, and exactly at 1.10332, and that's where we are seeing the reaction now. Now, the couple of things I want you to understand with this move. Now, what you have here from here to this point is highly suggestive, because if you look at, let me go to the monthly time frame. Now, this is the monthly time frame. And in the monthly time frame, if I may zoom out, so we can see that price had been on correction for quite a while, correcting downward for quite a while since 2008. So the price had been correcting downward for quite a while. And if you want, can you even draw a trend resistance on this? Let me see if I can manage to draw that. A trend resistance on this. Can I manage to draw that? Yeah. If I manage to draw that. So you can see that that trend resistance just got, broken somewhere here. Somewhere here. So just go broken somewhere here, which signifies this area. This is 1 and 2, you know, and this is A. This is 1 with 1 here, and this is with 2. Sorry, this is with A, B, and a C, you know, which marks the end of wave 2. You understand? And you must understand how this thing forms. When you have a wave 1 here, and this is a return of wave 2, really, is to have 1 and a return of a wave 2. But that return of a wave 2, this is the first leg of it, and the second leg, which is B, and a C. Then after this, you can begin to tell yourself you're having a 3, which is a 3, 1, and a 2, 3, 2. Before you have a 3, 3 to the downside, and a 3, 4. You know, when you now have a 3, 4, a 3, 4 here, then probably a 3, 5 here. In that regard, before you now begin to see this is a 4 on this time frame. When you now see a 4 on this time frame, you now want to finish the 5th wave. Now, in terms of the 5th wave, which is the last wave, we say this is a 1 of it and a 2 of it, and this is a 3 of it. And you're saying this is a 4 of it. Now, this is where it's interesting, because if you look at it here, up to this moment, the trend line was not broken till the 4th wave here. Okay, it wasn't broken until this. We had this wave and this wave. So there is a shift, gradual shift. But what do we expect really? Because this is it here now. So a gradual shift of momentum to the upside. So that is what we are trying to see, because this trend line, it's been broken at the moment. So it is wrong for you to come here. It is wrong. So the correct thing is this one. This is the correct thing here, is this one. That's how to actually lay it. That's how to place it. That's the correct thing here. What do I use? It's not, we don't use commonly. Let me use this. Good. So that will be the correct thing to use in terms of looking at this trend resistance, you know, and this wave was actually completely broken. So this is 3 and a 3, 4. Of course, this could also be a 3, 5. It could also be a 3, 5, you know, which is truncated. You understand? So it could be a 3, 5, which is truncated. But then, in terms of what we are seeing here, this movement, if it's a 3, 5, then the price should actually be seen going upper and not lower. So that nullified stays as a 3, 5. So we now see the last leg, which is the final leg of this move. If we had finished 4th wave here, we are seeing the final leg. Of course, from the 5th wave that is going down, you might be noticing that momentum is being lost. And that is what is happening now. The momentum also is being lost. That is why it's falling out of the trend. So now we're now going to focus, which is the first part of it, the second part of it, which is the third part of it, and the 4th part of it. Now, this 4th part of it, you know, even though momentum is being lost, I'm going to tell you what I think and what may likely happen. So we're going to pay attention to what may likely happen here. Now, for the monthly, on the monthly, we can see that reaction now, that this is really moving down. But in terms of what you see, if you're going to interpret this, is more of a correction. Look at here, when this one appeared, it's a correction to the downside, and the price still had to go up. When you are going to have an intentional move, so look at it, this and this, when you see all these price actions, tells you that the price may still in future be correcting to the upside. So when you see it like this, so you can see the movement and price went up. And now this also, it's the momentum candle, the price. Then when you now begin to see this appearing like an hammer or whatever, or a pin bar, so that tells you that price may be going down for sure and may not come back up to the upside, and you can see, and lower lows and price began to fall. Now, here also in the middle of this one, so price, this appearance of this tells you that price may still be, corrected to the upside. In the appearance here, even the appearance here, price may still be correcting to the upside. That is how to interpret. And here too, price may still be correcting to the upside. And at this point, when price did this, you see price may still be correcting to the upside. And we had this correction and the momentum candle appeared. So when the momentum candle appears, then you may tell yourself that the price may not come up again, at least to that level. Now, with these, I still believe that this is the first month and price will still be correcting to the upside. But how up the price will correct is one thing now we have to now figure out. So we have to figure out how price will correct. So we need, well, it's still early in the month. This is the month of February. And so we're not just in the middle of the month. We're not up in the middle of the month yet. This thing, you can only interpret once this one closes properly in the months, okay? So now, but if you now go to the weekly, so this is telling us nothing. So don't just take it, okay, oh, with this, and it's going to be like, okay, price is still coming up. No, so we have to allow it to close and look at it at the end of February to tell what the price is going to do next. Now, but let's now go to the weekly to see the weekly summary. Now, from the weekly, what we are seeing here, we are seeing now that this move, of course, the way I interpreted on the monthly, now this has told me that the price will still be correcting. So if the body had been up here and the tail down, so that tells you that the momentum is now going further down, okay? So, but with this that we have, price will still be correcting in the future to the upside. How up, I don't know. I can't tell. Not until we see the structure. On the daily structure and the 4-hourly structure will tell us at what point we are going to be seeing this correction. And the structure also will tell us to what level we might likely see that correction. Now, this kind of a candle is what I would expect around this area. But because why this one is not a good candle to send price to the upside is like, you can see this tail had gone above it. And this one formed and this one formed, where it's, if you have read the structure, you would know that there are corrections going on here and that the appearance of this should not shock you. But again, this appearance of this also is to freak anybody out to think that the price is going to continue to go. It's a bullish candle, but understanding structure will tell you that, oh, this one is just appearing at the height of the structure and it's likely to be with 5 and this. Now, having said that, let's now go to now discuss about the structure and what I think about the structure that went up. Now, this went up as a 5 wave. This went up as a 5 wave. This is 1 and a 2, 1 and a 2, a 3-1, a 3-2, a 3-3, a 3-4, and the 5th wave of the 3 and the 5th wave, complete 5th wave. So this is wave 4 of the major, which is the wave 4 of the major really. wave 4 major, and the fifth wave ended here. So the third wave, the fifth wave of the third ended here. If I may come again for you to understand what I'm trying to say. Again, this is wave 1 and wave 2. 3-1 and a 3-2. And that forms what? An A, B, and a C. So if you see A, B, and a C, you might be able to plot where, wave 3-2 will start from or end, and the beginning of wave 3-3. So wave 3-3, usually it's the longest, and that's what we are seeing now. So a 3-3, the first part of it, and the fourth of it ended here to start the 5-3. So the height of the 5-3, and after the height, the corrections to give the fourth major and the beginning of the fifth wave, which ended here. We're now seeing this move to the downside. Now, this one did 5 wave. It could be the beginning of an impulse. So if it's the beginning of an impulse, then this is going to come and do wave 2 in a major, which will not break the low here. But I won't be too fast to think that this is the beginning of an impulse, that we're going to see a 2 and a 3. I won't be too fast to do that. What I want to apply myself is to think that this can actually be, because we've been moving down, this can actually be a zigzag in the making, a zigzag of the correction of the entire move to the upside. Now, how deep is going to go? And for us to have a 4 and finish a fifth wave. So we're going to see that. So what do I expect here? I expect that this one is going to be like a B. Then this is wave, sorry, a wave of a zigzag and a B wave to the downside. And we're going to now have a C wave of the zigzag. And where I will expect at least this movement to equal, when this one comes down, to equal to the upside. That is what I will expect. It is only when that structure is broken to the downside and it goes below 85. That is when I will now know that forget. So this is now running like wave 5. But in terms of structure, I don't expect that this coming down is a wave 5. I don't, in terms of this structure. So you should not apply yourself as this is wave 5. So it's better for us to see this one as a wave B. And after wave B, and we have a movement up again, then we cannot expect a wave 5. That is how to apply ourselves. But if something gives, fine. But this is A, and it makes more sense to look at this as A of a correction of a zigzag to the upside, and a B wave and a C wave. But how low, how deep will this correction be? It's another thing entirely. And if you think of a zigzag, in a zigzag move like this, we expect at least 50% of a correction to the downside. That is what we expect. Now, this correction itself may be more complex as it's coming down. It may be more complex. We might see a move like this. You might see a move like this. What do I do now? What do I do? Because if I bring anything out now, okay, we might see a move to the downside like this. If I do just bring this in, it's going to just mess up the whole thing. We might see a move like this. We might see a move to the downside like this. And another move to the upside like this. It doesn't have to go as far as that. and another move down like this. We might just notice that. So would these on the weekly be a flat, a regular flat, or anything? This move that is coming down in itself can be anything. This one can be a zigzag to the downside. This one can be a flat, a regular flat on the 4-hourly. So on the 4-hourly, this one can be a zigzag, and this one a regular flat or any form of flat on the 4-hourly. And if this one forms a zigzag to the downside, this one would have to form a zigzag also. So there is a whole lot of permutation. So we need to see the end of this wave before we have this one. So for people that are not in, this is not the area you want to look for your sell again. And of course, you don't want to buy. We want to see the beginning of a correction or a bigger correction to the upside to look for the buy. And after that, we're going to look for a sell again. You know, it's like that. So it's a waiting game. And after that, the price may now decide to do something. The price may decide to do something and try to go up. To go up or be here or be here. It might not even break this place. It might just be anywhere here. The price may decide to do that. Now, what are we trying to say? From this point to this point, so far, price is playing below 85. If price decide to move up, see, this is 85. So far, price is playing below 85 and it's not up to 90. Another leg to the downside will be possible. In that case, we are going to see more of a complex correction to make the correction going down here more deeper. So that is what to expect. So I don't know, but we need to see this wave end for more correction to the upside, which is the leg B of the correction on the daily. You know, we had seen correction on the 4-hourly already. So we need to see how it's going to give us a daily correction to the upside. And the first wave to the downside is A. We're going to see a B. Probably we're going to see a C. Then after that C, we're going to see an X or not, because after this correction, this may actually go all the way to break the structure to the upside. Once the 85 is taken up, then we're going to break up. 85 of the entire run here. Once it's broken, we're going to break up. But then, based on what we know, we expect at least 50% correction, which is probably should be deeper. It's not as if you're going to have that 50% straight to this point. No. So where is that 50%? From here to this point where price had make a U-turn. This is 50% here. So price is not, you know, it's still at the edge there. Yeah. So that is where we are seeing 50%. That is 50%, and this is 61. Okay, I'm going to change 61 a bit now. 61 is going to be here. So we should be watching around this area. We should be watching around this area. So we should be watching around this area. So how deep is this leg going to go? It's going to go more deeper. And for this one to thrust up and probably the last leg may just fall inside here. If that happens, then we should be, but not, technically, I wouldn't be thinking if a C wave falls short of 50 before we see correction to the upside, then I should be expecting like a 7 swing. At least that is what I'm saying. Because this is a 3 swing. If it's going to be a 3 swing, 1, 2, 3, you know, if it's 1, 2, 3, and it's going to go up, the fourth one should break up. But if it didn't touch this area, technically, I should be expecting that, okay, the fifth wave is going to come down to give me another 3 wave, and the 7th one is going to break up above. So that is how to look at it. So we are talking of different scenario now, different scenario and what could play out. So I'll drain myself to now begin to anticipate that it's going to be a 7 swing. No, we don't. It doesn't work like that. It might not be a 7 swing. It might just be a 3 swing, and the price will break up. And if they decide to do a 7 swing, yes, then we'll see if it's going to be a 7 swing. Then nobody can forecast that. So the movement here, price movement, will tell a story in itself. So this is what we are seeing, and how perfect, it had worked, that entry based on our analysis, and if I go to the daily, I'm going to do, this is the weekly now. So we need to see the daily. So we have not seen a good correction on the daily. So I can't tell you how low and how deep this is going to run. I can't tell you. But based on what we have here, what do we expect? Let's go to the 4-hourly. Now let me say again. So you can see the pinpoint correction, perfection, how it actually worked out from analysis at this level. It's just touched it and the price made a U-turn, Let's see on the 4-hour now. On the 4-hour now, looking at the 4-hour, you can't really say that this is 1 on the 4-hour and this is a 2. I think this one is just running as a flat to the downside, because if you look at it, I won't want to count like that, because from this low here, this particular low here at this point, it didn't catch 50. 50 is just above here. So I won't say that this looks like a zigzag or whatever. So anybody may just want to count this one as a wave 1, 2, and a 3, a 4, and a 5, and a 4, and to finish a 5, and you see a correction here. I wouldn't want to see that. I wouldn't want to see that. But let's see how far this is going to go. Let's see how far this is going to go. So it doesn't look like a zigzag. That's what I'm saying. It doesn't look like a zigzag to me. That's the price movement on the daily doesn't look like that to me. So, and if anything, if I want to push this one up here, which is the height of the correction here, and the low, or the correction began here. The correction began there. So let's look at that correction. So that's the daily. So let me switch back to the 4-hour. So now let me just lay it more perfectly now. So that's the height of the correction. And the low of the correction just a little more. So looking at this, you can see a bit of, price breaking this line tells me that price is going to correct upwards and continue to break down. That is what I can see. I think price is going to correct upwards and continue to break down. Now, what kind of correction did we notice here? From here to this point. Let me go to the 1 hour for us to understand the kind of correction, that we saw there. Now, it's kind of funny. So looking at this correction, we would rather want to look at it this way. An A, a B, and a C. I think it's better that way. So if you look at this as A and a B, so from the beginning of this wave to this height, this gives like about 61.8, more than 50. That's a format for a zigzag, okay? So if it's a format for a zigzag, so let's see how it has played out to that upside. And so we missed just the entry slightly. Okay. I think what happened, is not just a straight, it's not a straight movement. So what happened, it's seeing this as a 1, 2, 3 move. So which ends your A here, and a 1, 2, 3, which ends your B here, and this to the upside. That is what I can see here. That is what I can see here. After this move and this move, 1, 2, and a 3, which is an A, 1, 2, and 3, which is a B, 1, 2, and this is 5. This is 5 wave for sure. This one is a 5 wave for sure. It is 1, 2, a 3, a 4, and a 5. So this is a flat here. This is a flat here. It's a flat here. So this is a flat. It's not a zigzag. It's a flat here. This is the last leg of a flat. This is a C and this is a B. And you can probably just have a little, so it's not a zigzag here. So and when we look at this movement and this correction to the upside, let's see what it's giving us. That's how they have messed it up, really. No, it's other way around. It's other way around. So that movement, yeah, that movement, yeah, it's manipulated. So the wave here is manipulated, but it's like 1, 2, 3, which is an A, and 1, 2, 3, and a flat. So it's manipulated, really. The flat here is manipulated. So if anybody is going to get this, you're going to get this because you are counting the last wave, really. They messed it up with this volatility in the middle. News caused this and messed this thing up here. So, but you're not telling yourself, do I take this? Do I take this? So that's the thing. So now, but what could have helped is counting the wave here. This is 4, 5 to 4, and the last one. So if we had done that from here to 4, yeah. So you should have just looked for your entry around this area, because you know that this one is not going to pass 161.8. So that is just where we missed it. And we're going to look for more opportunity, though we're in a sell, so we're still going to continue to deal with that sell. So this is what we have here now. This is what we have here now. So let me go back to the 4 hourly. Now going back to the 4 hourly. So what exactly do we expect to happen? Well, we expect that this movement, if it's going to be something, should at least, if it breaks below 161.8, so we are going to be seeing more structure to the downside. 161.8 of this move. So we have this going up. We should expect, if we break below this, then we should be expecting more move to the downside. You know, that means it's not within correction. So that means if we break 161.8 of this, the whole move, then we should be seeing more movement to the downside. So that is what we should expect. So you can't treat this one like a zigzag, but in case you may want to consider it as a zigzag, so what do we do? In case we want to treat it as a zigzag, what do? We look for an 100 extension. So we start from here, where the price made a U-turn to the low so far, which is at this level. And here, at this level. So we should expect at least 100. The 100 will fall here. Let me take this off. The 100 will fall here. That's 100 for you. Will fall in that. The 100 will fall within that space. Let me make it bold, okay? I don't need this, so that we don't get us confused. So the 100 will be in that space here. So that's what we're looking at. And if 100 falls in that space, you know, that's about 1.0427. I think between here and here, we may be seeing movement to the upside for bigger correction. So that's what we are saying now. But this wave will continue to count, We are going to break this on the daily to start a new daily correction. Then we'll see the last leg to the downside. So I don't know where this is going to get to. I just drew this. So it's not really, don't think it's going to come here. It may go beyond that, but we don't know. Now, how to break this? We need to, if this is how to break. So once we break this structure, so you can draw this on the daily. You draw this on the daily. So once you break this on the daily, then it's the beginning of a new structure to the upside. That's what I'm saying, because it might not really get, deeper, it's a new. So we still expect that this is the A that is coming down. It's not finished yet. This is a correction for more break to the downside. That's what we had here, a correction. So when you see a daily correction like this, it's more break to the downside. So, and when they are going to change direction, we'll see. And we might have a break here. So, and once we see a B leg, we're going to see a C leg come down. And that correction may not stall here. It may go all the way down to at least around 76 or 7. This is 61 to 70, 85. So you can't predict anything, but you are going to follow it. And if I go back to the 4 hour, so I need to now make this more finer here. I need to make it finer here. So I need to make it finer there. So I need to make it finer there. I need to make it finer, the correction finer. I mean it's really bigger than I thought. Okay. So you must have a break of this. So once we have a break of this, then so at the break of that, so we now expect us to switch gear to B. So we are expecting that movement, or that we are going to probably do that within this zone for now. This is at 60. So we should expect that within this zone. We should expect that within this zone. We should expect that within this zone. So a 6-1 retracement or extension of this move is at this level. I think I just showed that again, if I'm correct. Yeah, a 6-1. Yeah, that's it. 161.8. So we need to foresee how price, make nonsense of this and enters this zone before we now begin to see, okay, at what point are we going to move up? So, but this is where you have to set your alert to say once this is broken, then we are now doing a B leg to the upside, and we're going to see a C leg. So far, we have not gotten to a 50, which is here. A 50, which is here. Which is a 50. So this is where we need to see movement of price. We need to see that. We need to see that. So we might be seeing a small correction to the upside and a break, more break to the downside. But if you're going to, it's not going to be a zigzag really. So I shouldn't expect that it's going to work. Is this an 100% of the entire run to this point, and here 100%? But if it's going to run like that, we'll see. So, but once you break this trend, daily trend, then for sure you are within a B. But for now, we're going to see more down. That is what I see. We're going to see more down. And we will now look at what we have by the end of this coming week. Of course, we need to break this, because we are going to break this with 4. We're going to break the entire with 5 run to the upside. We're going to break it, and we'll see the extent of, how we're going to go in our correction. So I think that ends today's trading. That ends it today. So we're going to see more in the coming week. We're going to see more in the coming week. Let me look at 1 hour. Yeah, it's almost breaking. So this is a correction of 1 hour. Is a correction of 1 hour. So in terms of 1 hour correction, we can see this move and this move, And if anybody had wanted to look at this move and this move to guide you, this move and this move, I think it's, don't let me just go there. Don't let me go there. Now, there's a movement here to this side, and there's a correction here, which finished this correction, and a B, and a C. I don't know if you can see what I'm trying to talk about. Now, this is what I'm talking about: an A, B, and a C for further downside, an A and a B and a C and a further downside. Now, we now had this correction here also. Now, this correction, what tells you that price may not correct to break this above? There's something that you must see. Now, looking at this move from here, if you take that move, I'm just teaching us something. So you can see, once the extension, once this 1.8 is not taken, then there's still a tendency for price to break to the upside. So you can see that from this movement A, if you consider this one to be an A, see, this is 161.8 is still below it. Price had not gotten there. So price may still correct. It's only when you know that price movement had broken 161.8 to the downside, then price will not correct to break at least a top. That is what you should expect on a particular time frame. Now, with this now, because price had extended to the downside for more than 123, you may still see this one as a possible extended flat, okay? In that case, where you don't expect this price going up to break is this. If I want to do that, it's just more like a piecemeal of a movement. So from here to this top, down to this, an area, if it's going to be an extended flat, it means that I don't expect price to pull beyond these two areas, 1 and a 2. So this will be like a blue zone, and I may want to sell again. The blue zone I want to sell again, but price may not even do all of that. So this is the 123, if it's going to be an extended flat. It doesn't have to be, because the movement is quite impulsive on 1 hour time frame. It's quite impulsive on 1 hour time frame. But on this time frame, I don't expect price beyond this area. So I don't expect price beyond that area on that time frame. I don't expect that. So what I'm saying is that I don't expect price beyond this area on this particular time frame before we see more movement to the downside. So in case this one is going to be an A and this one is a B, and this correction going up should not extend beyond here. So price cannot go beyond 1.07400 in this time frame before we see more down. That's how to do the analysis. And if I may check on the 4 hour, what do I get on the 4 hour? On the 4 hour, because of this movement, if I'm going to break this one, I need to see how price will get here first, correct, before I now begin to think that it's going to break above. So on the 1 hour, it shouldn't be more than this on the 1 hour. I'm letting out so many secrets now. So on a 1 hour with this move, it shouldn't be more than this before we see it come down a bit. If it doesn't break low, then it's going to probably, and it's begin to move up again, then it might now begin to climb up. And if it's going to climb up, will it break this? I wouldn't think so. If it's going to break this one, then we're not going to now treat the whole of this movement 1, 2, 3 as an A, and this movement as a B. And it is not like that yet. It has gotten like 100. So we need to see this one break below to know what extent it's going to break before we see that correction that may likely break this one. So this is not a movement that is going to break this one immediately. So we need to see, if you see this one as an A, the whole movement here as an A, this is a complete correction, 1, 2, 3, that is moving price down. So I need to see if it's going to make a U-turn at some point here, before I now begin to think it's going to break this. But for now, based on what I'd seen in the 1 hour, price will not break beyond this before we see more down. And after now we see more down, want to see another correction to the upside. That's how to take it piecemeal, really. I don't know if I'm letting out some secrets for some people to see how price movement actually works. So it will be wrong for you to think that, what price is going to do from this point, is to recover as much as, 85, and you are waiting for 85. You're not going to catch anything, and you're waiting for 85. That, okay, maybe the price is going to do 85 or at least 76, which is around this area, and price is going to now continue to move down. On that kind of a correction, price is not going to come here. It's not going to come here. So you will know how Sunday is going to be when you look at Saturday. So those are the gimmicks. Price may first walk up around this area or not. Go more down. We need to see how price is going to go more down. So, but once price breaks, once it's 1.8 extension here, forget that price, may even come here immediately. No. So we need to see what is going to play out between this zone, which I had marked out on the 1 hour, and this is the 4 hour zone of 161.8. So we need to see what is going to happen in between here now. In between here now. So before we see where price is going to go to again. So we need to see what is going to happen here. If we correct up, are we coming to break below? So once you begin to break structures here, and once this 1.8 is broken, then don't think the price is going to probably return almost immediately. No. So which means it will put an end to a theory of an A and a B. Once it's 1.8, this one will not be a B again, to expect a C before more down. So, but if anything is still possible, we're going to look at the manner of correction we're going to get in the middle of that. But these are places that we have touched based on our construction of price movement for what we are looking at. So breaking this movement in between here will tell what price is going to do next. And that's also huge. So price may just come up, then continue to break, stall here, move up, or continue to break down. So we'll see. All right.